Hello and welcome to Building the Premier Accounting Firm. This is a podcast dedicated to helping individuals have a successful accounting, bookkeeping, or tax business. In doing this, the show is actually committed to giving you the tips and tricks, the advice, suggestions that you need to properly market and grow your business, to price your services, to offer quality accounting services that you can do confidently and competently, and most importantly, get paid what you're worth. Now, as an episode, we basically invite guests onto the show, experts in their respective fields, and I'm excited about our guest today, Stephen Moskowitz. Now, Steve happens to be someone that I'm sure you're going to appreciate. He's got a great deal of experience, and he basically knows that clients' lives and livelihoods can be upended or even destroyed when tax troubles arise. As a tax attorney for more than 30 years, Steve has made it his personal mission to help business owners and individual clients successfully resolve tax issues and go on with their lives. With extensive knowledge of tax law, a desire for a swift and vigorous defense, and decades of experience with tax authorities and in the courts, he has an unusual perspective and judgment in assessing the best way forward and the right resources to achieve that resolution. Now, Steve started Moskowitz LLP because he saw that the big corporations were consistently navigating the tax code to their advantage. The smaller businesses and individuals were not. With prior experience as a CPA at a national accounting firm and with extensive experience in the corporate world, Steve knew that he could actually help the small businesses and individuals by applying what he knew and wanted to make a critical difference in the business and individual lives that he was affecting. He was able to protect them from the powerful government and enable them to enjoy the fruits of their lifetime work and otherwise be basically the ones who take control and act. Now, today, together with a full-time team of tax attorneys, CPAs, enrolled agents, and other professional staff, Moskowitz LLP actually helps businesses and individuals across the United States as well as overseas to resolve a wide variety of tax matters. His team also creates strategies to utilize the tax code and relevant treaties to their clients' benefits and provide ongoing tax support as well as tax return preparation. Now, Steve understands that his clients need high-quality representation but do not have unlimited budgets, and for that reason, he has a cost predictability that is important, where he's able to offer his clients a flat fee and not subject them to expensive hourly rates. So with that all being said, Steve, welcome to the show.
Thanks so much for inviting me. And I've dedicated my professional life to this. I'm a simple guy. You've told the audience before I was a tax attorney, I was a CPA. But you didn't mention what I was before I was a CPA.
Which was?
I was a New York City taxi cab driver.
What were you doing as a taxi cab driver? Was that while you were going to school?
Yes. I was driving that cab at night, and I learned so much from it. I was a poor boy. I didn't want to be a poor boy, so that's why I went to school. That's why I got the professional licenses, because I wanted to make something out of myself. And true, when I worked for the giant firms, because right now I have a heavy-duty background in tax, and the guys that have a heavy-duty background like me usually wind up with the big firms whose clients are the Fortune 500. And that's how I started out, too, in New York.
Uh-huh.
And one night, I always worked hard, and one night I was working away, and it dawned on me that no matter what I do for a Fortune 500 company, I'm not going to make a difference. And I said, do I want to spend the rest of my career, work hard, and it literally doesn't matter if I show up for work or not? No. So I stayed long enough to get some good experience, and then I went out on my own over 30 years ago. And I remember one of my very first cases. The client, every 5 minutes, reminded me that if I lost his case, he would lose everything he'd worked for in a lifetime. And his mother and his sister, who was an accident attorney, were in the courtroom. And when he wasn't reminding me, they were reminding me. And most people would get nervous over that. But for me, it was exhilarating. I thought back to that night in New York, because I'm in California now and have been for the past 30 years. And I thought, to this client, I'm everything that stands between having a lifetime of enjoyment for the lifetime he'd worked for or total ruination from the government. And when I got the court to agree with me, I was absolutely elated. And you know what? To this very day, I feel the same way when I represent a client who has been falsely accused of something or has a problem or whatever it is. and I'm able to help them, it makes me feel really good. And our clients are all types of people, from individuals, mostly small businesses, medium-sized businesses, and larger. We do all types of stuff, from simple domestic tax returns to international tax planning and everything in between, civil cases, criminal cases. And when I started out, I built the practice from nothing. I came to California, I had nothing, and I had just finished my last fancy degree because, as you know, I have a bachelor's and master's in accounting. Then I became a CPA. Then I got the law degree that all lawyers have. Then I went on and I got an advanced law degree, specialization in tax. I was also a professor for 10 years. And then I started up my practice while I was professor. So I could make a little money at night being a professor. And I started off very humbly. I didn't have an office. So to meet with a client, I had to, take them out to dinner or something. And then that got a little expensive. So I would meet clients in the faculty lounge, but that wasn't too impressive. Then I went to work for somebody else and he let me use his office, but that wasn't too prestigious too, because even though I had a card printed, my name wasn't on the door, so there's really no way to find me. And then I opened my first office. Now, this was back in the days when I opened it in an answering service, long before a lot of things we have today. And I always remember this office. This room was the smallest room I had ever seen. And you had to pay an extra $10 to have it furnished, and I had it furnished. I had this tiny desk, and there was my chair that had a hole in the arm, and the two client chairs, but all three chairs were different colors. And it was a really tiny room. And I still remember that the move-in was $130. Well, I didn't have that much. And so began the bargaining. I had $100 bill, and I said, this is it. This is all I can do. If you want me as a tenant, you're going to have to let me in for $100. I can't do 130. And so the career began. And I was in that office for a little while, and I met with clients. But I knew the time would come when I'd have to move up to something bigger. And one day, a client came in. I remember him, a very nice man, a dentist. He brought his wife and his father. Now I needed a third chair. What to do? So I went into the conference room and I took a chair and I carried it from the conference room to my office. And I tried. I really, really tried. But there was no way physically, because this room, I'm not kidding, it was really tiny, that I could get a third room in the chair and close the door. So basically, I had to put Daddy kind of in the hallway of my office. And I thought, this is not the office of a winner. I'm going to get something better. So the next day, I went out and I shopped, and I went into a much nicer building, and I looked at a 2-room suite. I didn't know how I was going to afford it, but I said, somehow I'll do it. Bear in mind, I was still a professor, so I could use some of my teaching salary to pay the rent. And one of the things I did, I pioneered a lot of things, because I said, well, you know what? I know some guys just have, and initially, some of the guys in the building made fun of me and said I was being foolish, because they took one room and they bragged to me they didn't have any other expenses because they did their own typing, they answered their own phone, they had an answering service. But I said, I want to have a firm. So I took 2 rooms, and I was a professor, and I hired 2 of my students. And one student went to school Monday, Wednesday, and Friday, the other Tuesday and Thursday. They were friends with each other. So each night, when the one student finished her work, she would call her friend and say, here's what happened today, and here's what's coming up tomorrow, so that the other person was right up to date. So I kind of began job sharing, and that's how I started.
Well, let me jump in right here. I want to back up a little bit. So what I think our listeners would appreciate understanding is you obviously, while being a taxi driver, happened to actually be going to school to get your accounting degrees, as you mentioned, and then became a CPA. The disconnect that I'd like to actually fill in real quickly is, was it your intention all along to become also an attorney, or what led you to become an attorney beyond becoming a CPA? Why did you see the need to become an attorney as well?
Because there was more that I could do for my clients, and I could take the case all the way and defend them. I didn't want to be a guy just say, look, I have a great idea, but if the IRS challenges it, go to somebody else and have them defend it. I wanted to be the one to go ahead and say, you know what? If the IRS challenges this, I can go all the way up to, including going to court and attorney-client privilege. And that's become even more important today because the problem is if you fess up to your accountant, your CPA, more and more now, the government is calling the CPA to testify against the client and say, okay, Mr. or Ms. CPA, what'd you tell your client? What did the client tell you? And give us all the papers. They can't do that with an attorney.
So was this something that you realized early on in your career, or is this something that became more and more apparent, which then pushed you to become the attorney that you are?
It was both. I always wanted to do it.
Okay.
And as I progressed in my accounting career, I realized that my initial want, my initial desire was oh so true because it wasn't just I want to be it. As I was going through the process of becoming a CPA, I said, yeah, my idea to become an attorney is really going to work out with this. And I wanted to be a tax attorney. I wasn't there to do divorces or do accident cases. I wanted to be a tax attorney. And I remember when I first started out, some of my friends in New York would say, oh, are you kidding me? You know how many years that is? You'll never stick with that and do it. And I said, okay, maybe that's you. But that was my plan and dream. And yeah, I was in school for years and years, but I'm glad I did. It was worth it.
All right. And you moved obviously from New York to California. I'm just curious, what caused the move? What was that for?
I wanted to be the top dog in tax. And I found out that there was one last credential. When I was finishing up in law school, so now I had the bachelor's degree in accounting, master's degree in accounting, CPA. Now I had the law degree. But I found out there was one last credential that I didn't have yet, and I didn't want anybody to out-credential me. I didn't want anybody to have something that I didn't have and lord it over me and say, well, I have this credential and you don't. It was an advanced law degree, specialization in tax. At the time, there were only 22 schools in the country that offered it. I had been to San Francisco before as a tourist, and I said, wow, it'd be really nice to live there. And the other reason that I did, again, I wasn't kidding, I was broke. I was so broke, I couldn't afford a car. And in San Francisco, I could walk everywhere or take the bus.
So if you were in a position to move, that was more at the schooling point. You were pursuing your credentials still, but you then obviously as a professor then started the business. Were you a professor at the same school that you were getting this extended certificate?
Yes, and sometimes that was Golden Gate University here in San Francisco, big school.
Okay, all right.
And at some times I was literally in the same room, both as professor and as student.
Gotcha. And so when you finished, you started your business and you gave us kind of an introduction to that, which I appreciate. I'm going to go back to that. But I want to just ask one question before I do, which is, with your business, was it more the CPA credential and the accounting services that you were leading with in your marketing to acquire clients? Or was it more the attorney and I'm here as a lawyer to represent you? Which do you feel that your clients were more drawn to?
Initially, it was the accounting because initially people came in and said, can you do my tax return?
Gotcha.
Can you do my monthly accounting? And then other things came up where somebody was being audited. Well, yes, CPAs do audits, lawyers do audits. When I showed up in the IRS office for the audit, was I there? You know, I went there, my official title was attorney.
Yeah.
But having the understanding of the accounting was tremendously helpful. And what IRS attorneys have told me is that is something that's so important because when you go into tax court, what you have to watch out for is the judge is going to talk to you about the tax return. And there's lots of fine attorneys that understand the law, but when a judge says, well, what line is that on the tax return? What are you talking about? Well, I know the theory, but you have to know the form. That was so helpful. And even in law school itself, when I was taking the tax courses, I remember my classmates would say, you actually understand what the professor is talking about, don't you? And I did, because when the professor was talking, in my mind's eye, I saw the tax forms.
Yes.
As a CPA, I knew how to fill out the forms.
Yes.
But I didn't know why. My classmates, we were learning the why, but they didn't know where that went on the form or even what form it was.
Yes.
So it was so vitally helpful. The way I would explain it is it's like the attorneys that become patent attorneys. Boy, is it
Uh-huh.
helpful if you have an engineering degree because you understand the blueprints.
Yes. Now, one of the things that I have to ask, and I've had this conversation only a few times, is those individuals like you that have become both CPAs and attorneys, which did you find most difficult? Passing the bar exam or doing the CPA?
Oh,
Uh,
that's clear. And everybody that I've asked the question to has said the same. The CPA exam is more difficult than the bar exam. And I'm a member of two bars, New York and California. And they're the two toughest bars in the country.
Yeah. Well, you've just now made it still 100%. Everybody's saying the same thing. So, yes. All right. So, let me go now to your business. You were sharing some excellent stories there that I believe a lot of the people listening can definitely relate to, which is as they're starting like you, there are those instances where this is kind of a supplemental income, something on the side. You were a professor at the time, you were taking on clients, weeknights, weekends, you spoke of meeting them for dinner. Initially, you went into this office space. It was very cramped, very simple. You really took a leap of faith, not there, but again, when you then expanded to your next office and really took on this vision of, I'm going to get two offices and I'm going to furnish them. I'm going to go all in. I love that passion. Where do you think that was coming from? Are you an entrepreneur at heart?
Absolutely. And the hunger of being poor. I was hungry and I wanted to make something out of myself. And, I was on my own. I don't have any family. So I had to basically earn enough money for food or I went hungry. And that was my whole life. I understood that. And that hunger really drove me and it helped me. And I always want more. To this day, I mean, knock on wood, I'm very fortunate. When I started out in that building and I took those two rooms that I couldn't really afford,
Yeah.
the other guys were making fun of me because I had the two rooms and the secretary. And I said, but if a client comes to the door when I'm the IRS, I don't want them to find a locked door. And they said, what happened to my attorney? Did he retire? Did he get run over by a bus? What happened to him? And I said, what happens if you have a client that shows up early and you're with another client? What do? Tell them, stand out in the hall? And they laughed at me. They told me I was being foolish, spending the extra money. Guess what? Before I left that building, I eventually had the top two floors, and those guys still had their one rooms.
Yes.
So the bottom line is what I'm saying to your listeners is this. If you don't believe in yourself, how are you going to have a client believe in you? You got to believe in yourself. It's almost like a religious thing. You have to take that leap of faith and do it. Just do it. Don't come up with the excuses. Oh, well, what if I can't pay the rent? What if I can't pay my assistant? What if, just do it. I don't want to hear the excuses. And I've had some tough times. I remember when I was running that office, at one time I was a little low in funds. So I went ahead and I borrowed all the money I could get my hands on, which was at the time, I took a $250 cash advance on my Visa card. I took a $250 charge on my MasterCard. Now I had an extra $500 of capital. And yet I made it work. And there were ups and downs. I remember there was a 9-day period where my phone didn't ring. And I thought, uh-oh. And during the day, I'd actually pick up the phone to make sure I still had a dial tone. So I said, okay, I got to do something about this. I just can't sit here. So what I did, I'll never forget, I went to a printing store and I got this really bright colored, shocking lime green posters. And I said, I'm going to go ahead and use these flyers. So I got these big shopping bags. They were very heavy. And I was carrying with them. And I went up and down the streets of here in San Francisco. And I put the flyers under windshield wipers. I spent the whole day giving out these flyers. The next day, I went back to my office for the results, and I got 2 phone calls. And of the 2 phone calls, one guy wasn't interested, but the other person made an appointment. I was going to have my next client the very next day. Isn't that exciting?
Oh, yes.
Except he didn't show up. So I didn't say, oh, boo-hoo, I wasted my printing cost. Oh, boo-hoo, I walked around for nothing. Oh, boo-hoo, the guy didn't show up. I said, well, I guess flyers don't work. I'll try something else. So what I'm going to say to your listeners is this. You keep trying and trying and trying. You don't take no for an answer. You don't take a defeat. And I had lots of stuff that I tried, and sometimes it worked and sometimes it didn't. For example, one of the things I did a little bit later on, I said, you know what? I wonder if radio advertising would work for me. So I made a big investment now. I invested $800. Now, again, this is years ago, and $800 was a lot of money for me. And I invested that in the radio, and I knew when the ads were going to run, and I listened to them on the radio. Tragically, I think I was the only one listening to them, though. Nobody called. So I determined, well, I guess radio advertising is not for me. But the radio salesman called on me again. He said, well, Steve, the way you did the radio was not the best way. You figured out yourself and you spread out your $800 so people didn't hear you much. What you got to do is you got to spend a little more, and you got to blow the whole thing in a short period of time so you can have a good exposure, but it's just going to be for a couple days. So I took another leap of faith, and now I really spent an incredible amount of money for me at the time, $1,500 buying more radio ads. That was double my first buy, and I did it all. I blew it all in 2 days based on the salesman's recommendation.
Mm-hmm.
But this time it worked. So what I would say to anybody listening to this, starting your practice, is remember, I came from nothing, but you try and you try and you try again. It's like when I was much younger, I did some boxing. And then when I became an attorney, I decided to use my head for something else. But when I was boxing, what I remembered was, I'm not saying I was the best boxer in the world, and you could knock me down, but I kept coming. I kept getting up. I kept fighting. And that's what you got to do in business. And if something fails, don't let that slow you up. And what I would say is, the way you're successful in business, and the reason most people are not, is the first failure. They give up and they say, oh no, I just can't do this, and I'll have the security of a job. You know what? There is no security in a job. Boss could lay you off any day they want. You see that all the time. Just look at the business news. And you have to have a certain mindset, though. For example, as the years went on, I became more successful. There was this attorney that took me out to lunch, and he said, Steve, and I want to do what you're doing, and I want to have my own practice, but I have to be guaranteed to make a profit at least as much as the wages I'm making.
Mm-hmm.
So when I finished laughing, I said, that's not the way it works. See, the reason that there's risk and reward, the reason you stand to make a lot of money in business is because you also stand the risk of losing your shirt. So he thanked me, and then he took me out to lunch a second time, asked me the same question. I gave him the same answer, and he thanked me again. Then he took me out to lunch a third time, asked me the same question, gave him the same answer. They never talked to me again. So the bottom line is, you have to be able to take risk, and you have to roll with the punches. It's like if you're boxing, the best boxer in the world still gets hit. If you say, you know what, I couldn't stand the fact that somebody would punch me, don't get in the boxing ring. Like Mike Tyson said, you make plans until somebody punches you in the face. Well, you have to be able to take that punch and say, okay, I'm going to roll with it. And then you learn things like, well, wait a minute, lift your hand up higher so that you can block that punch. And that's what you do in business. You believe in yourself and you keep moving forward. No matter what it is, you keep moving forward. And everybody in business has ups and downs. And I take a look at successful people. And you know what most successful people have in common?
What's that?
They have a string of miserable failures before they hit big. It's like one of the examples I talk about all the time is Apple Computer. And an example that I'll use is that let's say we're talking to a mom and pop store, and I'll say, so mom and pop store, do you think you make more or less than Apple Computer? So they laugh and they say, well, of course, I can't even dream of making anything like Apple Computer. I said, but guess what? Apple Computer pays less taxes than you do. So that's one of the things that I talk about with tax planning. But remember when Apple Computer threw out Steve Jobs because everybody else thought they knew how to do it better than him, Apple Computer was within 6 weeks of going out of business and filing bankruptcy. And Steve Jobs came back and said, okay, you guys learned you can't do it without me. And he changed things. And look at Apple Computer today. So the bottom line is, what I'm saying is, you don't get discouraged. If you can hedge your bets, that's great. If you're starting out in accounting practice, like I did, I started out doing tax returns on the side, on people's kitchen tables in New York with a pencil. I'd literally go to their apartments. I'd sit down at their kitchen table and I would do their tax return by hand it to them. And then I got some more and got some more. And even here in the practice I currently have, when I was starting to practice, I was a full-time professor in 2 different universities. I was teaching a lot of classes, and I was teaching them late afternoon and evenings. I was teaching CPA review class. I was doing a lot of teaching, but also it gave me the money to start up my little fledgling practice with my few little clients. But one of the things I would do is I'd always talk to people. Even when I had no money, I would talk to people and get business that way. For example,
Well, hold on. Before you give that example, let me jump in and do something here that I think our listeners would appreciate. One, you spoke earlier of some of the struggles and challenges you faced growing your business, but it was the sweet success that when it came, you much appreciated because obviously you had gone through quite a bit to get to that point. And there were those trials. You spoke of the advertising, different things that you're trying. There is a bit of what's going to work and I need to try something's better than nothing, and so I think a lot of people can relate to what it is you're describing there. The one thing I wanted to jump though into is these examples of what you shared about Apple and the small business owner that's in your office. It's the realization that there's some tax strategies that can be going on that individually or as businesses we can be using to actually mitigate some of the tax liabilities that we have. So I'm just kind of curious. You come at this both as a CPA and an attorney. What are some of those tax strategies, the tax advice you would give that can help the small business owner that you really feel that sometimes is just not addressed or offered?
here's how I begin that. I say to a business owner, I'm going to ask you a tough question. Would you prefer to A, pay less taxes and put your money in a federally protected place that's safe from lawsuits and even a bankruptcy if that's necessary? Or B, would you prefer to pay more taxes, have your money in the bank, and it can be seized by a plaintiff that beats you in a lawsuit or you lose in bankruptcy? They all laugh and say, ha ha, I would take the less taxes. And I say, do you have a retirement account? Oh, no. But I said, well, you laughed at the example, but in reality, you've chosen to pay more in taxes and have the money less secure. So one of the things I talk about, for example, is retirement accounts. There's over 20 different types. Everybody knows about IRAs and 401ks, but there's a lot fancier. I have clients that put away hundreds of thousands of dollars in these accounts, and that's for the owners every year. And some put away 7 figures. So the bottom line is there's 3 advantages. 1, you pay less taxes. That in of itself is a reason to do something.
Yes.
2, the earnings are not taxed while the money is in that account. So your earnings grow a lot faster than if you have to give away so much in taxes. And 3, under federal law, it's classified as what's known as an exempt asset. So that means if you get sued and the plaintiff wins an amount in excess of your insurance, they can't touch your pension. And although I hate to mention his name, the poster boy for this is O.J. Simpson, because as you know, he's got a multi-million-dollar judgment against him for a long time. He's not lost 1 penny of his pension. And even if everything goes wrong and you have to file a bankruptcy, you keep 100% of your retirement account. Even if it's millions of dollars, you keep it all. So we start out with that. Next thing, we talk about something called cost segregation analysis. Well, that deals with depreciation. And we know if we have a building, we have to depreciate that over 39 years if it's commercial or 27 and a half residential. But with cost segregation analysis, we send an engineer to the property and he or she says, well, this is 39 or 27 and a half year property, but this is 15-year property. This is 10-year property. This is 5-year property. And this we can write off in the initial year. So what it does, it greatly accelerates the depreciation, and that's how banks make money, time value of money. Would you rather have a benefit today or 39 years from today? Obviously, I'd rather have it today. Now, when someone gives you something nice, what do you say?
Thank you.
See, that's how I know you guys aren't attorneys. An attorney would say, more. I want more. And what happens is you say, well, okay, I can have the sweetest thing in life. If you take somebody out on a romantic dinner and you see the soft lighting and the wine, and you look at your romantic partner there, the sweetest words I can imagine saying to that person is positive cash flow with a tax loss. And that's what you have with this building, where you've made a cash profit. The amount of money you took in is more than the checks you wrote. So you have a cash profit in your hand,
Yes.
but through use of depreciation, you don't pay any taxes on the building. Now, you don't write a check to depreciation, it's just an accounting entry. But through the cost seg, let's say the building has a loss. Can I then take that loss against other income like wages, dividends, interest, profit from a business? Most accountants will say, well, no, you can't do that because that's the PAL rules, passive activity loss limitations. But under Internal Revenue Code Section 469, there's an exception to that. That's the real estate professional. And with a real estate professional, if we have a married taxpayer filing jointly, only one spouse has to qualify. That's an exception to the rules. And then you can use that passive loss against this other income. So again, this depreciation that you never wrote a check for, not only is it saving you tax on the building, it's saving you tax on your medical practice or your grocery store or your dividends or your interest. That's terrific. Still another one. Suppose somebody says, well, that's great. That's all for business people, but I'm retired or I'm an investor. I make all my money from real estate, or I make all my money from stocks and bonds or crypto. And what can I do? They say, well, retirement accounts are designed for businesses. So what we do for our clients is we go ahead, we set up a company. So instead of trading in your own name, you're trading in your company's name.
Uh-huh.
We set up the pension in this trading company. And then effectively, when the smoke clears, we can offset investment income with our retirement deduction and not pay taxes and have the money sitting in that account where now we're earning on that and we're not paying taxes on that because it's sitting there. You combine all these things and it's wonderful. And so many people are resigned. I've had so many people in my life say, well, you make money, you got to pay taxes. And I say, well, wait a minute. Look at the Fortune 500. Look at all the every year you read about them in the newspaper. You have these companies making profits, billions of dollars, billions with a B, and they don't pay any taxes. Well, how is that? Because they have armies of guys like me who go ahead and say, well, look, do this and this and this, and you won't pay taxes. Well, people say, well, wait a minute. How can that be? Why should that be? And here's the way it is. The tax system has two purposes. Everybody knows about one purpose. Most people don't realize the second one. The purpose everybody knows about is they extract money from us. But there's another purpose. In a democracy, the government can't order you to do something, even though the government would like you to do it, and it's good for the economy. So how does the government get you to do something that they want you to do, but they can't order you? They give you tax incentives. That's why you can do all this stuff, because the government says, well, you know what? If you go ahead and buy that building or buy that factory or buy that equipment or hire somebody to do this or that, that's good for the economy. So your reward is to pay less taxes, or in some cases, pay no taxes.
Mm-hmm.
That's the second thing that people miss. The other thing people miss is they say, well, I've never heard of these things. And that's the problem. So suppose I said to you, I'm going to hand you a business card. And the only thing you have to do is take this business card to the IRS and they'll write you a check for $1 million. Would you take and it's legal. Would you take the check and get your $1 million?
Well, it depends if I can get it in certain ways. Maybe I'll get $1 million in gold coin. How about that?
Well, let's just say the IRS, if you could buy the gold coin with the check, you just take this business card to the IRS, they'll write you a check for $1 million. I mean, most people would say, yeah, I'd do it.
Yeah.
Suppose I did this, though. I took that magic business card and I put it in a dump truck, big dump truck, and I mixed all other regular business cards together with it. And then I dumped all the cards in your office. what you'd probably do is say, oh, look at this mess in my office. I got to get to work. Somebody clear all these cards out. What was there, a truck accident here or something? And what you did is you ignored the magic business card. And that's the way our tax laws work. They're there for everybody. It's not just the Fortune 500, but
Uh-huh.
they're so convoluted. You have to know where the magic business card is. And the tax attorneys for Apple know where those magic business cards are. That's part of what we do for clients and say, look, if you do this, you save taxes. I've dedicated my professional career to this. That's what clients like. And your listeners here, if they would concentrate not so much, again, filling out the forms is important. That we do that too. However, where the real money is for them and what the clients like is the tax planning, the tax saving. People don't like to file their tax return. They do it because if you don't, you have a problem, but they don't like to do it. Let me tell you, clients like it when you say, hey, you know what? If you do this, you'll save taxes. They like that, and clients will pay for that. And that's part of what you're doing, building this. And that's how I built my practice when I would talk to clients, not about, oh, well, you know what? I'll do your tax return and it'll be completely accurate. Anybody can do that. It's, well, wait a minute. Did you know if you did X, you'd save? Oh, I never heard of that. And I've had a lot of clients new clients, when I'll do their taxes for the first year and I'll do the tax plan, say, oh, is all this new? And I say, no, it's been around for years. Well, why didn't my accountant tell me about that? I said, that's why you're seeing me.
That's right. So give me an example of a common thing that's not understood, but is something that you regularly suggest that is a legal and likely tax savings strategy.
The biggest one are the retirement accounts. It amazes me how many people overlook that. And some people have objections to them for the wrong reasons. Like some business owners say, oh, well, you know what? They say that they realize they have to make a contribution to employees and they don't want to give that to the employees. And I say, well, that's bad thinking for two reasons. Number one, it's good to give things to your employees because that makes them want to work for you, not the guy down the street. But secondly, the owner gets almost all of the benefit. The employee just gets a small part, and the part that the employee gets is a fraction of the tax savings to the owner. Everybody wins. The employer gets a lot more benefit. The employee gets a little benefit. Only the IRS gets less, and we don't worry about them.
Yep. Very good example. All right. So I've got three things I've heard, and I would just like to get your opinion on these. I knew of some celebrities and entertainers that were asking in their contracts to be compensated not in dollars, but actually in gold coin, so that they could actually declare the tax value as the value of the coin rather than the gold standard ounce value. That was a strategy I was aware of for a while. I was curious if you had heard of it and what you thought of it.
Yes, and I'm very familiar with that. There's a name for that. It's called criminal tax fraud.
Okay, here's the next one. The next one happens to be, for example, a lot of people in California and other places will have swimming pools, and there evidently is the ability to, in certain ways, use the swimming pool as a tax write-off as an exercise equipment. I'm oversimplifying it, my question, but I'm curious if you're familiar with that.
Yes, now typically the way that was done, and that's something that used to be done, it's not really done now, but
Mm-hmm.
in those days, what you're talking about, the physician would say, well, you have some medical ailment
Mm-hmm.
that requires you to swim regularly. So you're going to go ahead and get the swimming pool for a medical reason. But that's kind of like that was done in the old days, not really now.
Yeah. Okay, so there's that one. The last one is what it might be hard for me to ask in a short period of time, but let me explain this. A lot of people say that the rich don't pay enough in taxes. We're talking like Bezos and whomever else. Well, the interesting question is a lot of their declared wealth happens to be in non-liquid assets, and more importantly, happens to be in like shares and so forth that they've technically not sold. So yes, they have on, let's say, Fortune magazine, a declared worth of a certain dollar amount, and it increased so many millions or billions over the past 12 months, so that they had in this year this gain. But in reality, it wasn't through compensation or revenue. And therefore, the perception is they're not paying taxes on their increase because they've technically not received that increase. So publicly, the politicians kind of spin it to the point of they're not paying their fair share, but in reality, they haven't received the gain to pay the taxes on. Does that make sense?
Can I use a little bit of strong language here? And if it's
Oh, of
inappropriate,
course.
you cut it out. To that, I say, bull feathers. You don't pay taxes on unrealized gains. And
Thank you.
let's take it back to the simple guy. Let's assume you bought a house for 100 grand.
Yes.
And let's say today your house is worth 2 million.
Yes.
You have gone up in wealth $1.9 million.
Yes.
You don't pay a penny on that until you sell it.
Yes.
Same with anybody in the stock market. That's true for everybody.
Yes.
Our system is based on the cash system.
Correct.
When you sell something. So if you have something that goes up in value, and that's true for any of us,
Yes.
where you buy a share of General Motors stock at 10 and now it's worth 100. You made 90. You don't pay any tax on that. But you can use that. You say, well, you know what? That's great, but I need some cash. What do I do? Well, you can go ahead and say, you know what? I can take a loan. You don't get taxed on a loan, and you can use that as security. So the bottom line is, again, that's practical, because if you went ahead and didn't do that, there wouldn't be really a workable system. The workable system is when you sell something, that's when you get taxed, unless you have offsets. So suppose, for example, you said, well, you know what? I could sell that stock for a profit of 90, but I don't want to pay tax on the 90. So we do something called loss harvesting. And what happens with loss harvesting, you say, well, I'm also going to sell another stock where I lost 90. So I get the cash from both sales, but I don't pay any taxes because I can offset the loss of 90 against the gain of 90. So I have all this cash in my hand, but I don't pay a penny tax on it.
Because it's a net zero.
You got it.
I love it. I love it. You know what? I'm going to wrap this up, Steve. I really appreciate this conversation. I've quite enjoyed it. Not only the topics that we've covered, but the stories that have been shared. So let me just kind of do a summary of what we've discussed, and then I'm going to come back to you for a quick final thought. The first thing I'd like to do, though, is begin with an offer. One of the things that we've been talking about today is obviously the tax planning and preparation that we can be offering our clients. And one of the things you ought to consider becoming is, in fact, that of a professional tax preparer. For that information, I invite you to go to the episode description and there find information on what it is you can do to actually become a tax professional for both individuals and businesses, implementing these and other tax strategies to help them actually prepare for that tax preparation that you're going to be filing for them. Now, this is something that everyone should consider becoming, is in fact a professional tax preparer. Now, as a summary, one of the things that I thought Steve really illustrated at the very beginning is this desire to excel in business. Obviously, he went through some hard knocks. He found himself in a position, some lows at certain points, and he pushed through it. He tested various things. He was very tenacious in his desire to make this work. And one of the things that I think we can all learn from this as business owners is we, through those tough times, need to double down and actually be persistent and really kind of keep that long-term perspective. And he illustrated that very well. And I thought also when he was sharing the stories, there was also this perception of his clients. Initially, it was that small office, then going to the 2 offices, then the entire floor. But there is this perception, and we definitely need to make sure our clients see us as being professional and accessible. That's something that you have to define for yourself, and most importantly, decide what it is that's going to be for you both in the short term and long term. But then there's lastly these tax strategies that he was talking about. Definitely the retirement planning. That's something that we really should be bringing to our clients' attention. Steve said it best. What the tax code is a way of rewarding or incentivizing the citizenry, the businesses, to do things to stimulate the economy. And that's an excellent perspective of tax. What we're trying to just understand here is, what does the government want to incentivize or encourage? And that's where the rewards will be. And we need to understand from an accounting perspective what advice we can be giving our clients to best utilize or benefit from those as we do the tax planning. The other thing that I would also share here is he gave some good suggestions or examples of things that can be done. And what we can do is learn more about those and see which we can bring to our specific clients, considering their certain circumstances and situations. So, Steve, with that, what final thoughts might you have?
We just barely, and I mean barely scratched the surface. There's so much more I'd like to share with people. If you'd like to talk to me, you can call me at 888-TAX-DEAL. That's 888-TAXDEAL, 888-TAX-DEAL, or MoskowitzLLP.com.
Well, Steve, I appreciate you being on the show. This was great. One of the things that I want to do is encourage our listeners to find out more about Steve and what it is he's doing by going to the episode description. And in there, you'll find information on how you can contact him directly, as he just shared. And the last thing I'd like to do is just encourage you to realize this. If it's about business, it is universal. So listen to our next episodes. Be sure to subscribe to this podcast. And for more information on how you can apply these principles in your business, please visit us at universalaccountingschool.com or give us a phone call at 801-265-3777. Take care and have a great day, and be safe out there.